Hey, welcome. Today, we're diving into a subject that, let's be honest, can sound a little intimidating: accounting. But for the next few minutes, I want you to forget about the dusty ledgers and crazy spreadsheets. Instead, I want you to think of accounting as the language of business. It's a powerful tool that actually tells a fascinating story. A story about money, decisions, and what it takes to succeed. So let's pull back the curtain and learn how to speak this language.
You know, when you boil it all down, every business, every side hustle, every single economic activity really comes down to one simple, absolutely fundamental question: are you making money? And that's not just some casual question, right? It is the core driver behind pretty much every business decision. And this question is totally universal. Think about it. Say you invest a couple of lakh rupees to open a little stationery shop. You absolutely have to know if your sales are covering the cost of the pens, the paper, and the rent. Now, on the other end of the spectrum, imagine a massive telecom company with millions of users. They need to track every single call, text, and gigabyte of data to know if they're profitable. The scale is worlds apart, but the basic problem? It's exactly the same.
So, how in the world do you answer that crucial question, not just once, but reliably and systematically, day in and day out? Well, that's where accounting comes in. It is the elegant, time-tested system that was literally designed to answer that question. It measures what's going on and communicates the results. It is, quite simply, the language of business.
See, the way we think about accounting today is so much more than just keeping records. The key words in this definition are communicating economic information to allow for informed judgments and decisions. What that really tells us is that accounting isn't about crunching numbers for the sake of it. It's an information system, and its whole purpose is to help people make smarter choices.
And get this system has deep roots. This quote here is from Luca Pacioli. He was a Franciscan friar who, all the way back in 1494, published the first book on what we call double-entry bookkeeping. This one idea that every single transaction has two sides, a debit and a credit, is the bedrock of all modern accounting. It's this beautifully balanced system that's been working for over 500 years. Pretty amazing, right?
Okay, so we get why we need accounting, but how does it actually work? How do you take thousands, maybe millions, of individual transactions, every single sale, every bill you pay, and turn all that raw data into a clear, understandable story about the business? Well, it all comes down to a really simple and logical process. It's actually a pretty straightforward process when you break it down. First up, you've got recording. This is where every single financial transaction gets written down in a book called a journal. Next is classifying. This is where we start to bring some order to the chaos. We group similar things together. All the salary payments go in one bucket, all the sales go in another. That happens in a book called the ledger. And finally, we have summarizing. This is the magic step where we take all that organized data and boil it down into the final, easy-to-read reports.
Now this brings us to a super common mix-up I want to clear up. Bookkeeping is not the same thing as accounting. Think of bookkeeping as that first step we just talked about, the systematic, kind of mechanical recording of all the data. It's absolutely essential, but it's just the beginning. Accounting is what happens next. It takes that raw data and then analyzes, interprets, and communicates it. So here's the bottom line. Accounting really begins right where bookkeeping ends.
So after all that recording, classifying, and summarizing, the whole process leads to two incredibly important reports. The way I like to think about them is as the business's report card for the year and a financial snapshot taken at one specific moment in time.
So these are the two big ones. First, the profit and loss account. That's your report card. It tells you, over a period of time, like a year, did we make a profit or did we make a loss? Simple as that. Then you have the balance sheet. That's the snapshot. It tells you on one single day, here's exactly what the company owns, we call those assets, and here's exactly what it owes, we call those liabilities. Put them together, and you get a really comprehensive story.
All right, so we've put in all this work to create this detailed story about the business. But who's actually reading it? Who is this story for? And more importantly, why do they even care?
Oh, you'd be surprised. It's a whole bunch of different people. You've got investors who want to know if they should buy, hold, or sell their shares. You've got lenders, like banks, who need to know if the business is solid enough to pay back a loan. The management team uses these reports to make big strategic decisions. The government, of course, needs them for taxes. And even employees are interested because the financial health of the company directly impacts their job security.
So you can probably tell by now, accounting is a super dynamic and essential field. But, and this is a big but, it's important to understand that it's not some static, perfect set of rules. It's really a social science. It has evolved over time, and it definitely has its own limitations.
And I mean, it's got a long history. We can trace its roots all the way back to ancient Egypt and Rome. Then it got formalized in the Renaissance by our friend Pacioli. And in the 20th century, it evolved again to include new things like management and social accounting. What that tells us is, this isn't some dusty old system. It's constantly adapting to what society needs.
Which brings us to a really, really important question. We rely on all these numbers for huge decisions, but are they a perfect reflection of reality? Is the system itself flawless?
The short answer? Nope. And it's so important to get why. For one, accounting can't measure really crucial things that don't have a price tag. Like, how do you put a number on your team's amazing skills, or how much your customers love you? You can't. It also often ignores the effects of things like inflation. And maybe most importantly, it relies on the personal judgment and estimates of the accountant. That means the numbers aren't purely objective. They require some serious interpretation.
Okay, so after all of that, from ancient Egypt to modern balance sheets, from Luca Pacioli to the limitations of today, if there is just one core idea you take away from all this, what should it be?
It's this. Accounting isn't just about numbers. It is the language of decisions. At the end of the day, its entire purpose is to take the messy, complex reality of a business, translate it into a clear and consistent format, and empower people, from investors to managers to you and me, to make smarter, more informed judgments. And that right there is a language worth learning.